Welcome to PropSutra, where we discuss the important news, policies, and trends shaping India's landscape. And today we're diving into one of SEBI's latest proposals that could shift how real estate is funded and invested in India. We're talking about mutual funds, REITs, InvITs, and why SEBI wants to increase mutual fund exposure to these instruments. If you're a stakeholder in India's property sector, this episode is especially for you. We'll break down the terms, the proposal, and most importantly, what this could mean for capital flow, institutional trust, and retail participation in Indian real estate. So let's get started. Let's start from the basics. What are REITs and infrastructure investment trusts, and how do they work in India?
This concept of REITs and investment trusts is just a very new concept first. It came about around 10 years back and it has slowly started gathering steam. So, what exactly is it? First, its expanded form is real estate investment trust, okay, and infrastructure investment trust. So, these are the two sort of vehicles which is now allowed by SEBI and the government, where you're pooling in money from investors or unit holders, just like a mutual fund does. But the way that investment will be directed, the sector to which it will be directed, is more towards real estate in the case of a REIT and more towards infrastructure in case of a InvIT. So it is nothing but a mutual fund dedicated to a particular sector. So that's the most easiest way to explain what a REIT or a InvIT is.
And how big is this market for REITs and InvITs in India today? And do you think there's a potential for it to grow?
Oh, it's quite big already. If I look at REITs, it is about AUM, what we call, whenever you talk about a fund, you talk about assets under management under the fund. So the AUM for REITs is almost 1.5 lakh crores, which is 1.5 trillion, in other words. And in the case of InvITs, it's around 6 lakh crores or 6 trillion. So it's pretty big, but not as big as naturally the equities market or something. And is there scope? There's tremendous scope. Believe me, this REIT and InvIT market all over the world grows exponentially as a country develops. So is there a huge upside to it? Not by way of appreciation or returns, but by way of the volume and size of the market? Yes, this will be the future.
So could you break down SEBI's proposal for us to understand in simple terms what does it mean?
There are two things you might be asking me in this question. One is how is SEBI regulating the current REITs and InvITs?
True.
And the other, you might be hinting at what is the new change they
Yes.
brought in,
Correct.
where they're trying to bring in what we call an SME REIT, which is a small and medium scale REITs, where you don't need to have a huge corpus of assets under management, and it can be as small as 500 crores. And so this new one, because the old one is already well regulated, there are 4 listed REITs already there. So this is it goes on like any listed instrument, and it's like any mutual fund. You buy a unit and it is being managed by an asset manager whose basic job is to ensure it is holding actual built assets where there's a continuous flow of income, and 90% of the income has to be distributed back to the unit holders as dividend. So that's pretty basic and very straightforward. Whereas the new one, what it has tried to create in India is, see, at the top end, when you look at grade A space in India, we talk about only maybe right now under REITs is about 130 million square feet or so. It keeps fluctuating, which are under the listed REITs. Uh, but the scope of this REITs is quite a large. It might be able to go up to 300, 350 million square feet, in my opinion, of the complete commercial stock we have of around 650 million square feet. But more important than that is a large amount of this stock, and what is not captured out here is the grade B and the stock we have in smaller towns also. So those are also meaningful for us because there are rentals also in those. Everybody doesn't go into a grade A building straight
Yeah.
away. So, if in order to capture that, earlier what we used to do was we used to have strata sales, where
Yeah.
there are multiple
Multiple
owners,
investors.
fractional ownership. Today, those can come under REIT. So the SME REIT has been formed in such a way that they can all come under these grade B buildings, smaller building, smaller office complexes, can be brought under the REIT structure only that is better regulated.
Okay, so what I want to talk to you about is the mutual fund participation in these REITs and InvITs. SEBI has increased the amount that the mutual funds can invest in REITs and InvITs. So, do you want to talk about that as well?
Yes, because in the REITs and InvITs, is it only retail participation? Need not be. It can be institutional participation. It can be participation by the mutual funds and other financial institutions also. There was a cap because
Yeah.
as it is as a new instrument, SEBI was didn't want mutual funds to put in too much of money, but now that slowly it is being relaxed and it has almost doubled its quota to say that they can increase their exposure to REITs also in their whenever they have their fund schemes based on what their fund scheme is, they can increase their exposure.
And do you think that when this news did come out a couple of days back, did the market react in a very positive way?
It will because it widens the market immediately. See, any unit or share or stock which is listed, it needs a wide market. It needs the depth in the market so that it's traded. So if it is well traded, then the what we call the price discovery is much better. So for a large cap stock, for instance, the price discovery is much better than for a small or medium cap stock, where the trading is much lesser in volumes.
And what does this mean for developers and institutional investors?
It means when your market is wider, deeper, and there can be more participation by institutional investors, it means that it can have more of a supply. That means you'll see more developers coming forward with REITs, more institutions coming forward with InvITs, like your National Highways
Yeah.
Authority is one of the biggest players in that. So they will come with more REITs and InvITs because now there can be wider participation. So whenever you lower the threshold, whenever you bring in more institutional capital into these sectors, you are looking for a wider participation, a better price discovery. So you are going to bring in more stock into the market, which means more of that market on the ground becomes institutional. So suppose you see a building, suppose we see a commercial building in Nariman Point. Today it might be under fractional ownership.
Yeah.
Okay. So that doesn't really make it well because strata title always has an impact on maintenance. Okay. Whereas when you see it as an institutional owner, that one REIT owns it, they tend to maintain it well. They tend to keep the standards better. They tend to refurbish, renovate. So there's a lot of redevelopment, even when you think of sustainable practices being put into building. So it is always a better positive feature for these buildings to be owned by institutional investors. And those institutional investors now participate in REITs, and the REITs own the buildings.
So the retail participation in REITs and InvITs is said to be between 10 to 15% currently, which is slightly on the lower side. Do you think that's going to increase over time now with this new proposal?
It will because most people confuse REITs and InvITs as equities only. It's actually on the low risk. It's on the if you see a spectrum and you see the risk profile, a REIT or InvIT will always be very low risk because it's completely supported by physical assets. It's supported by a stream of contracted cash flow. So it's not that you're exposed to the vagaries of a company which is trying to find a market share or increase its market share. So people don't understand that. So if you understand the concept of where it lies on the risk spectrum, there will be more retail participation.
Sure. And what's the timeline for these proposals becoming rules in India?
See, any proposal takes its time to be absorbed by the market and to play out in the market. But I would assume to see a large sort of play out happening in the next 3 to 5 years. There will be a big market in REITs and InvITs.
Okay, because they're saying they want to pass this by July 2025.
Correct.
So do you see that happening?
That will happen
Okay.
because that is bound to happen. And I would feel over the next 3 to 5 years, you'll really see it being taken to
Okay.
and being looked at positively and favorably by the investor market, whether it's retail, as you said, where the participation is slightly lower today, or even by the institutions like mutual funds or other financial institutions.
Is the retail participation going to increase?
See, that's a good question. See, in any sector, whenever something new is introduced, it's usually the more informed investor who takes to it because he knows where to place it in his portfolio. So, right now, you're seeing a lot of institutional participation. Right now, you still see promoters' stakes being high. But the retail people, there's always a lag. They are not ever in the vanguard. They come in the slipstream. So as I think retail investors are enjoying the benefits of REITs and InvITs, are seeing what is the difference between that and actual equity exposure. I think there will be a lot more takers in the retail market because you have to understand the concept behind a REIT or a InvIT. The concept is it is supported by a physical real asset, and that asset is throwing up certain cash flow either as a rental or as a toll, or so it has a steady cash flow, cash stream. That cash stream is captured by the REIT or InvIT and distributed to the owners or the unit holders. It's as simple as that. That cash stream is already well accounted for. So you don't see too much of a movement on the upside because there's only very little of the corpus which goes into development projects, or sometimes suddenly you'll see a sudden increase in rentals or something. 80% of the time it will be pretty sober, stayed, steady. So when that is the case, it appeals to a low risk person to keep it there. So it gives you an alternative to the FDs and the debt funds. Instead of keeping all the money in FDs or debt funds, it gives you a good alternative to keep it in REITs. And in the REIT and InvIT market, if it is well listed, well capitalized, well traded, then you know its liquidity is high. Just like in a fixed deposit, everybody will tell you, we keep it in a fixed deposit because when I want it, I can get it back. Most people don't realize there's a cost of breaking a fixed deposit. You tend to lose a lot of money. So, in a REIT or a debt mutual fund, sometimes that cost is much lower because it's market listed. You can come out of it very quickly if you want. So, it's equally liquid. So, it's a low risk, high liquid sort of an instrument which I think as people understand the nuances of it, they will take to it.
So the final question, what are your closing thoughts for our viewers on this subject?
I think viewers should study this a little, talk to the financial advisors. I'm not saying you should just jump into it blindly. They should do it with discretion, but they will realize when they talk to their wealth managers, financial advisors, that this is a instrument which gives them a low risk, high liquid, mediocre, medium returns in the long run. So it is a pretty safe instrument to have in your portfolio, and it cannot be compared with having an exposure towards equities only.
Yes.
So it's listed, it doesn't become an equity. So it's like when people first thought of mutual funds, it was all equity mutual fund. Then they realized there's a thing called hybrid, there's a thing called debt, there's a thing called even government security. So there are all sorts of mutual funds. So and it is across the risk portfolio, risk spectrum. So I would believe that this is a sector which is bound to grow by leaps and bounds, and the retail investments in it will also grow. Yes, the lead will always be taken by institutional investors. And as we discussed earlier, the mutual funds would come in and participate in this also. But even a retail investor can directly enter this and not through a mutual fund when it is listed on the bourse.
Thank you so much.
Thank you.
SEBI's proposal is more than just a regulatory change. It's a game changer for India's investment landscape. By unlocking new avenues for mutual funds to invest in REITs and InvITs, we're looking at a future where real estate and infrastructure are more accessible, transparent, and critical to India's growth. For stakeholders, this is an opportunity to rethink strategies and capitalize on the evolving market. Thank you for tuning into PropSutra. Stay tuned for more insights as we continue to navigate the future of India's financial ecosystem.